and welcome to FountainFX on Monday the 7th of April 2014. The challenge with trading often is that we can get easily distracted by other people's opinions, other people's supposed credentials, being better at trading than us, knowing so much more, having a different view on the market, etc. The key with really when you're learning how to trade is to stick with it and to look at, just be aware of news, economic data that's coming out, and really allowing yourself time to avoid trading when that data comes out so that you're not caught on the wrong side of the market, but also just to take time in which to apply the consistent tools and techniques that we're teaching you on FountainFX. So this week we're just going to run through it. Last week there was a lot of economic data that came out Wednesday, Thursday, Friday, particularly Thursday and Friday, caused a lot of volatility in the market where there was no real direction or ability to be able to take trades. With the non-farm payrolls that came out on Friday and then also the economic data that came out on Thursday afternoon for the US dollar, we saw a lot of whipping backwards and forwards in terms of pricing. So there was no real consistency in terms of movement for us to be able to get in on a trade without the possibility of the market taking our stops out and then continuing in the same direction. And that's often the case when you do see volatility. Just stay out of the market, let it run, let it do its thing, wait until it starts to calm down, and then use trend lines, use support resistance, use bearish engulfing, bullish engulfing, dojis, all that kind of stuff, to be able to gauge where you would then want to enter, because you've got more of a calmer situation in which to enter the market with. Anyway, this week we've got some further news due out. If we scroll through the list here, nothing really came out today, Monday, but tomorrow we've got some more news if you're British or Canadian, etc. Bit of US dollar news towards the end of the end of Wednesday. We've got the FOMC meeting minutes, so that will be interesting to see what comes from that, the Federal Reserve, and whether or not Chairman Yellen comes out with another great statement at 8 o'clock. So that might be a great opportunity to take a trade again if we see that the market is very much consolidated prior to 8 o'clock in the evening. Last month we saw a nice 80-point fall from that at the point when the meeting was announced, and the news started to come out in terms of what Yellen was saying about easing and reducing the amount of debt that was being produced. If we continue on into Thursday, we've got unemployment claims at 2:30 and G20 meetings taking place as well. So that's even more news to cause some volatility this week. PPI and consumer sentiment, etc., is coming out on Friday. So Thursday, Friday, we've got the G20 meetings. So it's interesting to note what's happening this week. Be aware of that. Anyway, flicking back over to the charts. So going into the 15-minute chart on the Euro US dollar, we can see that on Friday we had a huge amount of volatility, very long wicks, top and bottom, no real clear areas of resistance and support, prices being broken through those levels with these long wicks, a lot of volatility, a lot of indecision. So no real opportunities to trade. I wouldn't recommend trying to trade in those kind of conditions. You'll lose a lot of money. You'll get whipped sawed backwards and forwards. So, but today, after the news reaction to the news happened, price very much went sideways, consolidated. So this morning we're in a situation where we've got price moving up ever so slightly from this area below, down here at the 136.97, something like that, pushed up to 137.05 before it pulled back. We finally get at this point here around about the 9 o'clock, so the European Open, we get a bullish engulfing candlestick, totally engulfs the bearish candlestick from before. So it's showing that price wants to go in that direction. It's broken above this area of resistance from previously, and therefore as it breaks through, price turns, pulls back down to it, uses it as an area of support before it continues on up. So 137.06.07 could have been a good entry point for long, but if you miss that, there's other opportunities. So if we go into a lower time frame, we can see how we could have traded this. So we go down to the 5-minute. If we start to look at what's actually happening here, we have a case whereby price has pushed up. Hang on, I'm going to go backwards. I'm not in the right place here. We are at 9 o'clock in the morning. Price has pushed up from this low volatility area, pushed up and then pulled back down to it. So we have a point here on the 5-minute where we have confirmation. Price is pushed above this area, then pulled back down into it, and then we then get this bullish engulfing candlestick. We also have the MACD crossover at this point, showing that momentum wants to go up. We expect a decline in momentum here and a turn, because it's the pullback to then confirm and continue in the uptrend. So when you're looking to engage in an uptrend, you want to look for points whereby the MACD goes negative, because it's part of a pullback, and then as it crosses the zero line, it's confirmation of the continuation of that trend. So with this bullish engulfing candlestick pattern, that's where we could have taken an entry at here, which is the 137.04. We can see price pushed up and then pulled back into it before it continued, but we've got an entry there at the 137.04, very much a buy signal. So we could take that. Now if we miss that, the other opportunity is that we use trend lines. We run a trend line up here, and then price breaks below that. Now trend line's running up to an area of resistance. So it travels all the way from the 137.04 all the way up to the 137.17, roughly. If I just raise that, we'll see 137.17. So it's up there. But when price turns and it falls, if we look, we've got the MACD pulling down here. When it gets to its maximum, it hasn't come all the way back down to here previously. So we can see that while this is showing a huge down surge in the MACD, price has actually moved literally from the 137.17 only down to the 137.10. It's gone 7 points, and it's taken almost an hour, roughly an hour, to do it. So what do? We don't necessarily take the short, even though it looks like at this point it looked like it was shorting, because we had a bearish engulfing pattern followed by another strong bearish candlestick. So we could have taken a sell order there, but with the price not really moving very much, it's showing us it doesn't really want to go down. It's struggling to get down. So what do? We place a trend line down here, and when the trend line gets broken, that's our trigger to say buy. So we've got a trigger there, close of that candlestick, 137.14. We place another buy order here because we missed it from earlier on. So we've got a nice buy order on the open of that candlestick there, and that's what we do. We place a buy there, we put our stop below. So our stop is below at 137.10, give it 2 points for spread or 3 points for slippage, etc. So 137.07 is our stop down here, so we've got plenty of space. Our entry is 137.14, so that's 7 points of risk, and we let the price run, and it pushes up, comes all the way back up into this resistance, and then breaks through. So we're watching the market. So as soon as we've taken that trade, we're now watching it. And what happens for the rest of the day? Pushes up, gets all the way up to the 137.35, does pull back a bit. So we've got an area of support, the 137.20, and then it pushes higher. Where is it at the moment? Well, we've got all the way up to the 137.45, and it's now sort of trailed off. It's the end of the day, so it's now starting to flatten out. But at the height, 137.45. So from an entry this morning at the European Open, we've got an entry here at the 137.04. Or if we miss that, we then have the break of the pullback for the 137.14. So 137.04 or 137.14 is where we buy and we get in. And at the moment it went as high as 137.45. So if we just manage a trading stop below the lows, we could have continued to have kept in and then taken our trade off at the high up here, probably at this level I would have thought, around about here, which is, I'll tell you the high of this one, 137.45. There you go, 137.45 was hit at just before 4 o'clock, so we didn't have to wait until 6 o'clock this evening. We could have exited at 137.45 earlier. So that would have been a nice trade of 30 points from here, or 40 points from 9 o'clock this morning. So 30 points from around about 11 o'clock, 40 points from there. But it was very slow this morning in terms of picking up speed. But there's the two ways in which you could actually take the trade, enter and make some profit. So a quick strategy on how to use trend lines for order entry. And thank you very much from FountainFX.